Okay, everybody, here we go. Another day in I don't know. It's a freak show. It's a freak show of truly epic proportions. Stocks finished positive across the board. At one point, the Dow Jones Industrial Average was down 362 points. We finished in positive with regard to the Dow, 26 points. I would call that a substantial rally off the low. The Nasdaq was the big winner here, putting on like 1.25%. Look, what is going on here? Again, first of all, I explained to you that the trend for this market is higher. I laid out some technical charts for you over the weekend. I explained to you the pump is not done. A lot of this has to do with, what we found out today. Number one, factory orders, U.S. factory orders have now plunged to a record low. Factory output is lower today than during the Great Depression. That was enough to push stocks higher. Secondarily, really, I don't know. I don't know what order this is in. But the Treasury is going to go to the Federal Reserve to borrow another $3 trillion for the second quarter. I want you to think about what I just said. The Treasury is going to the Federal Reserve to borrow another $3 trillion to pump this all up. How many times have I explained to you that this is not real, that this is fantasy land, and the disconnect between our economy, again, factory orders, we've never seen a plunge like this before, greater than the Great Depression. Friday, I mark my words, we're going to find out that millions more people lost their jobs, and this will be enough to push stocks up. The Federal Reserve is backstopping everything. I can't put this another way, people. The Federal Reserve has gone, if there's a word, beyond parabolic, beyond straight up, with regard to debt issuance. That's where we are now. And then when you have the Treasury going to the Fed to borrow another $3 trillion, it's gone beyond light speed now. It's like warp speed. I don't know. Parabolic warp speed debt. And that is the only thing keeping the stock market propped up. And that's why we got this rally off the low. Stocks rallied off the low. I mean, let's put this into perspective. A 400-point gain in the Dow off the low. Stock futures last night were getting hammered, down 360, 370. You know, I'm looking at it, I'm going, okay, watch what they're going to pull off tomorrow. And look what they did. Stocks positive across the board, especially the Nasdaq. And we're not done here. I don't give a damn what Goldman Sachs said. In the video I did this morning, I explained to you that Goldman Sachs said, oh, stocks are going to fall 40% from here. From where? From this morning down 400 points? Or from where we are now that we, gained all that back? They have no idea what they're talking about. They didn't have any idea what they're talking about with Apple either. Look, when you hear a major bank say something like this, you got to get some wheels turning in your head and say, what are they really trying to say? I'll tell you something else that happened. Warren Buffett dumped all of his stake in airlines, and they got decimated across the board. Airlines got decimated, and even with that, it wasn't enough to push stocks lower. The 10-year yield, I know those of you that follow my work were laughing all day long when you watch the 10-year yield kind of creeping a little bit higher, staying in that very, very tight range, and stocks just came up. Of course, it's all about the debt market. When you have a situation like this, we have no economy, factory orders, worse than the Great Depression. When you have the Treasury going to the Fed, borrowing another $3 trillion, where do you think stocks are going? You still think they're going lower in this environment? Honestly, how? Please clarify for this guy how stocks are going lower in an environment of warp speed parabolic debt and the Federal Reserve that's backstopping it all. There are more calls for negative rates, something the president has been screaming about for years. Negative rates, negative rates, negative rates. If the Fed has to, the Fed will go negative, not to protect the economy, because we have none, not to protect the middle class, absolutely not, to drive more cash into the stock market. That's the mechanism here. Understand where you are. I told you, where you are today is not where you were several months ago before the coronavirus charade was pushed down the throats of the people of the earth. And now we have the murder hornet. Oh yeah, the murder hornet. It's coming to get you. So you better get one of those outfits, head to toe, I don't know, leather or whatever they're made of, so the murder hornet can't get you. Look, they have a goal. One. That is to keep you afraid of something. If they can't keep you afraid of the coronavirus, they have to make you afraid of the murder hornet. Fear is how they control your mind. If you allow them to do it, well then I feel very sorry for you. They will keep coming after you with round after round and scheme after scheme and scam after scam to try to keep you fearful of something. Coronavirus? No, not enough. We need the murder hornet now to really get you going, because it's going to take over the United States. It eats flesh, it eats meat, and it's going to eat you too. So again, that's what they're doing here. Let's talk about a couple of other assets. I already talked about the debt market. 10-year yield did nothing. Actually went a little bit higher fractionally. That's why stocks went up on top of massive debt issuance, another $3 trillion from the Fed. Factory orders on top of the tens of millions of people who are losing their job, millions more to come, small businesses being shuttered. I mean, it can't get any worse than it is, but stocks are going up. Did you see what happened today? Now, I'm not saying, because people, you see some people, the trolls, if the stock market were to drop tomorrow, they're going to say, don't tell Greg was wrong. That's what they're going to do. But then the next day, watch the market pop. And then, of course, they won't say Greg was right. Understanding the mechanism here is just too easy. I want you to really take one thing away from this video. We've never seen this before. The Fed literally is backstopping not just the markets here in the United States, but they're backstopping the world. The Federal Reserve is funneling dollars around the earth to other central banks, and they're buying assets with dollars. Okay? We're not seeing hyperinflation. We won't see hyperinflation for a long time, because why? There is no money velocity. Cash is not moving through our economy. We're dead. If cash is not moving, you have no money velocity, which means all of these extra bills, we're getting $3 more trillion that the Treasury is going to borrow from the Fed, cannot chase the same amount of goods. Henceforth, why? I mean, prices are rising. You got to be brain dead or not shop to see it. But hyperinflation will come when we get a bursting of the debt bubble. I've covered that many, many times, when cash really starts moving. Right now, an enormous amount of effort is going into keeping the debt bubble hyperinflated. And the only way to keep it hyperinflated is going parabolic with the debt, beyond light speed into warp speed, and then into whatever comes after warp speed. You understand? That's what they're doing now. This is the real reason why the Treasury is borrowing more money from the Fed. This is the real reason why everything is what it is. The greater the Federal Reserve can inflate its two balance sheets. Remember, the Fed has two. The one you're allowed to see, the one you can go right to the Federal Reserve's website, it's ballooning. And then the dark money balance sheet, the one you're not allowed to see. As long as these two balance sheets are ballooning, the stock market will balloon with it. If we get negative rates here in the United States, you can expect stocks to rip higher. Rip higher. Why do you think the president is really or has been calling for negative rates since time immemorial? Because he wants to protect the middle class? Because negative rates are just so good for savers? No, because the president understands a very simple mechanism. If we get negative rates, it will force cash into the stock market regardless of a dead economy. And the market will rip higher. The rich will get richer. The poor will get decimated. The president is smart in this respect. He understands how it works. You got it? And he's right here. Again, the president gets a lot of things wrong. He gets some things right too. But here, if we get negative rates, we already have negative rates, meaning the rate of inflation is way exceeding the interest that people are earning on their interest earning accounts. If we were to get actual negative rates, stocks will shred higher. Forget about we'll be at Dow 35,000, Dow 40,000, whatever it might be. It'll be unbelievable if we do get negative rates. And the Fed will do it if it has to. Look, we continue to get economic news this worse than if we were in a Great Depression right now. Market wants to go up. When the market found out today about this factory orders historic low, stocks started to gain right there. When the market found out that the Treasury is going to be borrowing $3 trillion from the Fed, markets went up even more. Debt. It's all about debt right now. Beyond parabolic, super, whatever, light speed, warp speed debt. That's what's driving the markets. The economy, we have none. So the illusion will be kept real. Stocks go up, makes the rich richer. People see stocks going up. They think it's all good. Even probably those who are losing their jobs. I don't know about that, actually. So many people are in a very, very bad state right now. And it's going to get much, much worse. Much, much worse for these people moving forward. Anyway, that's pretty much it. Long video. I think I covered a lot of important things here. Please share this video. Get it out there. Let people understand what's going on here. I think you get it. All right. Love you a lot. See you in the morning.